What's up, guys? I just want to quickly go over my gold short during yesterday's London session. Hopefully, I can make it pretty simple and easy to follow so you guys can hopefully use this to your trading in the future. So, to get right into it, I saw this 4 hour fair value gap holding, and then we also had this beautiful sweep of this high here come up, take internal liquidity within the gap, and then instantly reject it down while holding the 4 hour gap, which is exactly what you want to see when you're looking to hop on side with like a short sided position. And then coming on that 1 hour time frame, you can see this hourly gap also is held, and this is just screaming bearish order flow. And when markets are presenting high time frame alignment with like the daily and 4 hour hourly, and then you can hop in on those smaller time frames, and then you can align yourself with that order flow of the higher time frames. It's going to work out in your favor way more often than not. So that's exactly what I'm trying to do here. Is I'm just trying to hop on side with that bearish order flow and go ahead and ride that down into that resting liquidity to the opposite side. So coming into London session here, what do I see? I see the 4 hour gap held, reversed, the sweep of internal liquidity, right? During Asia, manipulation up. Then I see this hourly gap here, right? Respect on the hourly, manipulation up, taking internal again, coming back down. And then the biggest piece of the pie is this 5 minute gap, which allows me to align that smaller time frame onto those high time frame uh, bearish PD arrays. Okay, so right here is where I went ahead and took my short position, and the reason I took my short right here, it's not because I knew that it was gonna chop in the knife here. It's honestly just because I checked the charts this day, yesterday. I happened to check the charts at about 11:15 or 11:20 or something like this, and I just happened to, as I usually do, start the daily, go to the 4 hour, the hourly, and those kind of things. I saw that high time frame bearish order flow, the 4 hour, the hourly, and I knew all I had to do is find some place on a smaller time frame to align myself with that high time frame bias. So short position here, stops above the highs here that retested the fair value gap on the hourly. Why did I pick this high here? Because I knew that if we came back up and we ran this high here, it probably would mean that we're going to close above the hourly. A close above the hourly means that we are probably going to close above the 4 hour, and the trade is not going to work out. So this is just a really good place to put my stop loss. Now, where did I target? I targeted sell side liquidity. Why this liquidity? Equal lows here, relative equal lows with this. This is just begging to be hit. We also had this fair value gap down here, which means there's a chance that it's going to bounce off of this, and that's a great place to get out of the trade. So TP1 was down here, stop loss up here, and then I went ahead and entered into this position, went to sleep because it didn't end up hitting until 2:30 a.m. Pacific time, which is where I'm at. And I did end up taking this trade on a total of 10 accounts, funded accounts, of course. On 5 of them, I took full take profit here at this low. And then on the other 5 accounts, I wanted to try to hold for a bigger piece of the pie. So I took partials down here, and then I held the rest with the idea that we may come down into this London low here. And the reason that I wanted this London low here, down here, is because generally when we have like this 4 hour gap hold and then we see this reversal of this hourly gap, those are very high time frame PD arrays, so it's very high time frame bearish order flow, and that's really good when you're positioning yourself on a smaller time frame to try to hold that for a bigger piece of the pie. You know, the full, what I would call this is like the full swing low trade, right? So you're going from this high, and then what did this high stem from? This low down here, this low down here. So yeah, I'm going for a trade that's going to get me all the way down there. Now, of course, when you see the hourly candle here, the hourly gap, I'm sorry, when you see this start to hold, and you have the internal sell side gets swept and it starts to hold, that's when you start second guessing and starting to kind of think logically, like, well, maybe it's not gonna, if it's holding this hourly and it's not getting that melt right through, which is what you want to see, it might end up reversing off this hourly. So when I woke up that morning, or this morning, I guess it was, I monitored this trade for a while after partials were taken, and I ended up just closing full position here at 10:58 or 10 or something like that, which is right before FOMC. I wasn't gonna hold this past into FOMC. I saw enough where it bounced off of it once, it bounced off of it twice, it started melting down right before FOMC. I was able to get out for 13 points on the rest of my position, plus the 18 points on the partials. So full TP was like 15 points, 16 points, something like that. And then on all my other 5 accounts, I collected 18 points, 2.5 R, and then 2 R. I'm happy with that. Wasn't going to hold it into FOMC, knowing that it's a good chance this hourly gap is going to drive it right back up, which is exactly what happened. So, all in all, I traded this as perfectly as I could have, and hopefully you guys learned something, kind of just how to align the high time frame order flow into a trade where you can enter on a lower time frame with that same alignment, if that makes sense. So yeah, have a good one, guys.